prime? No, it's very unique. Even the summer the time I go to give the president for the security support.
So basically we have both demand and supply zones. And demand areas are where we expect buyers to take up buy positions from, and then our supply zones are areas in the market where we expect sellers to pick up sell opportunities from. So basically we refer to as smart money concept traders, we refer to as demand and supply zones as order blocks, right? So you can have a sell order block or a buy order block. Now, generally, we have four types of zones. We have four types of zones. So two buy zones and then two types of sell zones. Now, for your buy zone, you have what we call a drop base rally. That's number one. And then number two, we have a rally base rally. Now, what it means is, so for the drop base drop, we have price trending to the downside and then accumulating, and then we have a rally to the upside. So a drop is to the downside, base is the consolidation, and then we have what's it called, a rally to the upside. So we mark out, some persons will mark out the entire base region, or they will pick out the last sell candle that transferred power from sells to buys or from sellers to buyers as the demand zone or the buy zone. Right? Now, for the rally base rally, we have price trending to the upside, accumulating, and then pushing to the upside. Now, note this accumulation here can just be one candle, and then this can just be a drop, one candle, and then a pullback to the upside. And then this can be a push to the upside, one candle, a single candle, or multiple candles, but they will come as consolidation or accumulation. Then you have a push to the upside. Now, some persons will mark out the entire zone as a buy zone, and then some others will mark out the last bearish candle that transferred power to buyers, right? So here, what you're not expecting is a push to the downside and then a buy. Same thing you're expecting here, a push to the downside, then you can have your buy. Now, the opposite is true for a sell zone. So the first kind of sell zone we have, the first kind of sell zone we have, What's this? Where is it? So the first type of sell zone we have is the drop rally base drop, and then the second type is what we refer to as the drop base drop. So for the rally base, who's this person? We have a push to the upside, a consolidation, and note, like I said, it can be one candle, then you have a drop. So what are you expecting? You're expecting price to pull back into this area and then give a sell to the downside, right? So let's do an annotation here. We have a sell zone. Then the second type is the drop base drop. Note, this accumulation, or what you refer to as the base here, the base here, the base here, the base here, can be one candle, or it can come in form of multiple candles. So we have blah 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 sell zone here. And then what are you expecting? You're expecting price to come into this area and then to the downside. So these are the types of zones we have. These are the types of zones we have. Let me see if I can do a screenshot for you. Okay. So in transferring this to, sorry, let me grab this here. Types. So in transferring this to the charts, now for you to be looking out for buys, it simply means your trend must be an uptrend, right? So you want to look out for these kinds of zones, either this or this kind of zone. Now, for you to be looking out for sell, it simply means you want to look out for a downtrend. Now, so here is the difference between this and this. This would now come in as per continuation, and then this will come in as per reversal. This will come in as per reversal. This will come in as per continuation. Now, for this to come in as reversal, it can come in your minor trend, right? Where you have an uptrend, and then you have this as a minor trend. You have a change of character, liquidity, and then an order block where you are buying from. So basically, you now have all of these areas as your accumulation. Let me do this again. So from here now, you have a change of character, liquidity, and then you're expecting price to come back into this particular area for a buy, right? So just like you have here now, just like you have this area here. You have a drop, a base, and then a rally. Now this is now your buy zone. So all you need to validate this buy zone is your liquidity, and then you're expecting price to drop into the zone, right? You have another one here where you have this as a drop, you have an accumulation here, and then you have a rally, and you're expecting price to come into the demand zone for a buy, right? Now, your for a continuation, you have this as a rally, this as a base, and then this as a rally. Then you're expecting price obviously to come into this area as per your demand zone for a buy. Now, the opposite is true for sales. Same thing, you have a rally to the upside, a base, and then a drop. You're expecting sellers to come, buyers to bring price into this area for sellers to take over. Same thing, where's the other one I just did? Same thing here. You have a rally, a base, and then a drop. Expecting price to come back into this area so you can sell. Same thing here. You have, for a continuation, you have a drop, a base, a drop. And you're expecting price, just like you did here, to come into this area for a sell. So there's no long talk in your demand and supply zones. The major thing you want to do is you want to make sure you are in the right market trend. Now that will help you identify where your demand zone would be. Now I'll give you two scenarios. So first, your break of structures and then your change of character helps you identify where what trend you are looking for. Your break of structure or your change of character helps you identify the trend. So if, for example, we have this zone, this break of structure here, and then we have, okay, let me do it this way. I think it's better this way. We have this, and the market does this, gives a change of character here, gives liquidity, and then breaks structure here, gives liquidity here, and then goes up. Now, remember, let's say we have a demand zone here, and then we have another demand zone here. Now, what did you notice? There are two types of demand zones here. First, we have a drop here, a base, and then a rally, right? Which is the first type, which is a DBR, right? That's number one. Then the second type we have
a rally-based rally.
Now, can you mute your mic? Thank you. The next one we have here is a rally, and then a base, and then a rally, right? So that would be number two. So number two is a rally-based rally. So these are the two types of demand zones we have. So it is either coming as per a change of character demand, which is a drop, a base, and a rally, or it is coming as per a break of structure kind of demand, right? Where you have a rally base rally. So the opposite will be true for a sell zone, right? The opposite will be true for a sell zone. So you have price giving you this break of structure. You would need to now identify your range, which is from this area to this area. And then you want to check if at the break of structure area, you have a demand that is supported by or protected by a liquidity. Let's drag this a little bit down. So we have a supply rather that is protected by liquidity. So what it means is we have a drop and then a base drop kind of order block. And then the next one is your change of character here, where we have a rally, a base, and then a drop, right? So you have your second type of order block, which is protected also by liquidity here. So whichever one now gives you an area to trade off from. Sorry, Diane, I really need to rest. Hope everybody understands this.
Yes,
Any
boss.
any challenge?
Okay, so I'm actually on the road, so I'm not getting everything. But my question would be, when you have this continuous change of character,
Yes.
at what point do you say the trend has changed from a buy, let's say from a buy to a sell? I don't know if you get what I mean. At what point do you now
start looking for
you now start looking for let's say a sell?
So it is when your external, let's say you are in a buy trend, when your external low has been taken out, that's when you now start looking for sells. So for example, and that's why it's very important to always deal with the higher time frame, because the higher time frame gives you a clear directional bias. Now, I see most people looking at the lower time frames, and this is where most of us have issues. We are glued to 15 minutes, 5 minutes, and then 1 minute. Now, here's the thing. Your higher time frame gives you clarity. I've always said this. It gives you clarity. Your lower time frame gives you entries. You don't want to be looking for clarity from your lower time frame. And that's why I've always said, if your higher time frame is saying buy, wait for your lower time frame to align. Some of us, we really do not understand that. Right now, gold is in a consolidation area. Gold is consolidating very much. And so you want to look out for areas. Where's this guy? You want to look out for areas you can trade off from. Where's this scenario? You want to look out for areas you can trade off from. As a matter of fact, once this guy is taken out, okay, once this guy is taken out, you want to now start looking out for sales. Now, here's the thing. If you have a range on the 4 hours, right? Let's say this is your last break of structure. Now, whatever you want to do, you do not want to be taking sales, except if you understand how to trade counter trends. But if you do not, don't try to take sales within this region. The only time you want to take sales, of course, you will get markets doing this, right? Changing character here, giving you all of these things. You do not want to be caught up in all of these things. It is until this guy is taken out that you want to start looking out for sales. So every other thing here, I see some persons want to sell from like this area, and then you will now be targeting one funny place. Except if you understand how to do counter trend. But don't try it. If you are in a buy trend, only look for opportunities to buy. Only look out for opportunities to buy. You don't want to start looking out for opportunities to sell in a buy range. Do you get? So what I would advise is this. Once you come to your higher time frame, let's say daily or 4 hours, you want to mark out your last structure or your last range, whether it is a buy range or a sell range. What it means is you want to look out for either a change of character or a break of structure. So let's deal with break of structure as per what we have on gold. This is okay. I think this is where the last break of structure happened. Now, if this is where the last break of structure happened, this is the low that brought about this guy. So what it means is we have something like this. We have something like this, and then we have this. Now, so if I have my range like this, I do not want to be looking for anything otherwise but to be buying. Once you are able to mark out your trend on the higher time frame, it is then you should now go to the lower time frame to now start looking for entries. But first, I will reiterate, first, your trend has to come from the higher time frame. Of course, you can have minor trends, but let your trends align properly. Let your minor trend, if that's what you are dealing with, let it align with your major trend. Now, if your major trend is this, you are looking for a buy, right? You can easily identify zones where you should be looking at. Now, the thing here is some of us, we want to now sell into the zones and we are caught up in so many things. In fact, price can do this and then now give change of character liquidity. And because you are impatient, because you are indisciplined, you now start buying from this area. What it will do most time is to use you as liquidity before coming into the zone. So you see that you have 2 to 3, 4, 5 losses before price eventually comes into your zone. Meanwhile, all you would have done was just to wait. Once you mark out your areas of interest or your point of interest, wait for price to, it is okay for price not to come into it. You see, like when did this happen? Or I think it was okay, it was somewhere around here. Yes, yes. That we had okay, this is it. That we had this buy from this area, and then we're expecting it to come into this high here. And then all of a sudden, price changed character. Now, if you knew what you were doing, you would have known that this is the last area that was not mitigated. Now, so long as this is not mitigated, you do not want to be looking out for entries. You do not want to be looking out for entries on any other thing because you will get change of character. This is a change of character. And you come and mark out this zone and price will take you out. You will get another change of character and you will mark out another zone here. Price will react and take you out. Do you get the point? But if you really know what you are doing, you would have known that this is the area to watch. In fact, when this one even happened here, you would still have marked out an area like this and price will react and still take you out. So once you are able to tell what the storyline is from here to this area now you now know that this is the area that is not mitigated. So every other area, you need to now wait for price to come into this area. Do you get the point? So as not to be caught up. Very correct. Like I said earlier on, this would now be your range. So if this is your range, this is the entry you have. As a matter of fact, if you would have had any other entry, it would have been this buy, this continuation zone, where you have, where you have a rally, a base, and then a rally. Or it would be this reversal zone, where you have a drop, a base, and then a rally. The two zones. This one has been mitigated. So you do not want to be, how will you now be looking for, so after this, we had this. How will you now, the only thing that is not mitigated is this. But your mind will now tell you that, oh, maybe this guy now is using this one here as liquidity and then is now reacting to one other funny order block, and you want to take a continuation here and it will chop your money when you would have just waited for this. And that's why you hear people say trading is 90% waiting. Once you mark out, do your markups, you wait for it to come to an area of interest. Hope that answers your question, sir.
Fantastic, sir. Really appreciate it.
So, like, I still have a trade running, even though I'm at break even. And this is why I still have that trade running. Now, I'll tell you, this is a break of structure here. Does anybody have a question apart from Brady?
Boss, it's the question about the pips.
No, we'll do that tomorrow. I don't want that to come into one video.
Okay, no problem.
Any other question? I want to know if I will end this session and then send another link.
Okay, good morning, sir.
Okay, let me end the session and send another link since we have plenty other questions.